Well, thank you, Todor, for joining us. We're excited to have Funded7 as part of the Prop Association. And, we're really excited to talk to you a little bit today about Funded7, what you've seen in the industry and what you are expecting in the future, as far as where the Prop Association can help and where the prop space is headed. So can you share a little bit about yourself and Funded7 and the background, kind of how you got started in the industry and what separates Funded7 from some of the other prop firms out there?
Hey, Jordan. Great. Thank you for this question. I'm absolutely thrilled to be on this call with you. Background, that is a good question. So I started in the financial industry in 2017, so nearly 10 years ago. And I started working in one of the biggest brokers and Forex brokers. And Exness. And there I was focused a lot about licensing regulations. I was working in compliance. I was caring about all of the topics and all of the things that even nowadays concern a lot of the Forex businesses. After that, I moved to other Forex companies. And in 2022, I started thinking about opening prop firms. And the company that I was working, where I was a chief operations officer, they decided to give me this project about a prop firm that they just had an idea about, but they never were able to action it or do anything about it. So I started to going deep into it, and this is where we created the previous prop firm, where I was basically, it was my brainchild, if you can say so. And we created a quite good competitive prop firm where it was very fair, very smart, all automated prop firm. And this was the first exposure into the prop industry for me, which showed a lot of potential and a lot of, interest. Because until then, I didn't know what prop. Yeah, it sounds like funded accounts, but what exactly is funded accounts? How it works? Is it good for traders? Is it just a scam or so on? So a lot of these questions were answered in my journey. And I reached a point in 2024 where I said, okay, enough is enough. I now understand the business. I really want to make my own company. And I have grown enough. I've made enough contacts. I have the right resources. I have knowledge. And of course, financial availability to make and grow a platform for myself. So this is when Funded7 started forming. And in 2025, May, we opened our doors to first traders. We're brand new, we're fresh, we're cool, but we have a lot of experience and a lot of knowledge because, again, all of these things that we have seen the last 2 years that prop firms passed through were maybe the most turbulent years for the industry.
Gotcha. So let's talk a little bit about that. You've seen, you maybe knew, but you have a lot of experience. And so you've seen how the prop space has evolved over the past few years. What are some of the, key things that you've noticed as far as which prop firms survive and which ones, end up, going under over time? Like what are the keys to success as far as being a, high quality prop firm that lasts year after year after year?
Yeah, that is an interesting question. It's not an easy answer. It's like saying, "Hey, what are the key characteristics of the best forex firms?" It's really hard to pinpoint into one thing. I think just like in forex, prop is all about consistency. As in not the consistency rule, but as in being consistent and being there and constantly monitoring what is happening, constantly updating your product, understanding the new trends, and not only understanding and following the trends, but sometimes setting up the trends. So when you see an opening, different markets or different, let's say, market practices, you should jump on it. And this is where we start understanding, hey, prop is completely different from Forex. We should not be built as a Forex company. We should not be having KYCs and proper manual processes and approvals and affiliation that takes 5 days to approve someone. No, this should be automated, should be online, should be with the idea of the online store where people would go in and just purchase a service, maybe not goods, but they would purchase a service where they would learn how to trade. And once they prove themselves after the evaluations, they can directly go into funded stages where they can make real money with the money that we offer them.
Gotcha.
And how to stay relevant in the business. Um, I would say this goes a lot about the involvement of management into the business, as in everyone says, yeah, this is on its own, it works on its own, and you don't have to pay attention. No, you should always pay attention to your competitors, to what is happening on the market. I'll give you some examples. 18 months ago, or maybe a bit more, I would say 20 something months ago, so 2 years ago, there was this market practice of a lot of prop firms were not allowing clients to hold their positions open over the weekend, or a lot of prop firms didn't allow weekend trading or news trading, or a lot of those restrictive things that were happening before were not allowed, or double leverage or things like this. They were just unfathomable because people didn't follow through those things. So nowadays it's established that, hey, everyone takes it for given that you can trade during the weekends or you can hold your positions open or and so on. But these things, if you see the natural evolution of pro firms, were not there 2 years ago, or they were not implemented by other pro firms. So it's not just the big boys. Sometimes the big boys and the big pro firms, they get a lot of pressure from the small ones to enable features or enable things that are in the benefit of the trader.
Gotcha. Okay. So it's more like, it's not that they have that stranglehold that they have in some of the other industries, but they're, being pushed to be better by some of the smaller firms such as yourself.
Absolutely.
Gotcha. So as we've seen a lot of these, larger firms, take the space and then smaller firms like yourself come in, how do you, differentiate your firm to stand out as far as the prop space versus any of the others?
That's a good question. Every prop firm there and out on the market would say, we're unique, we're different, it's all about us, we developed something new. Now, how you do this is you create challenges and you build things by understanding your market. Example, challenges that you would build for the African market would not be the same challenges and with the same logic that you would build for East Asian market or Japanese traders. The same logic cannot be implemented and you cannot build the same type of challenges for US traders. So you cannot simply take one thing and say, oh, I found the niche and I'm just going to do it everywhere. It doesn't work this way because the same logic goes to payments and everything else. Every market and every even affiliate or IB or any kind of group of people in every single country is different. So you can take one affiliate guy in Brazil and another affiliate guy in Brazil, and they might have a completely different way of thinking, method of finding clients or using banners in a different way. One of the first things that came to the industry was, hey, why don't you have general banners for everyone? And what we quickly find out from affiliates is that those general banners don't work. Everyone wants different types of thing in a different message with a different visuals with a different thing. So it's not one thing fits all. Yes, of course, big firms that have been established for many years, just like in the Forex industry, they don't have to change fast. They don't have to implement things quickly. They set their own pace. What sets us apart? What is our competitive advantage? No KYC on registrations and until payouts. No KYC for affiliates. Very good local payment methods. As in, I come from the Forex industry, so I understand local payments. So if you're from LATAM and you want to get LATAM payment methods, you get that. If you're from Japan and you like instant banking, you get that. A lot of the prop firms, they just think about payment methods as in, hey, I will go to Coinbase or someone and just get crypto and it's fine, I'm settled. Nope. Everyone, and what we saw statistically, that more than 60% of all purchases are done by credit card. And interestingly enough, not a lot of prop firms go to tier one processing, which they're possible and they can get. So these are the things that we can excel at. We go to the tier one processing, you just swipe your card, here you go, paid for your challenge. No mistakes, no proven, no bad approval ratios, no miscoding or anything else.
Gotcha.
Just good processing for cards, crypto, local payment methods, and always being open with your clients and being transparent. So this is where we are. And of course, our biggest advantage out of everything, if I say so, we have, I would say, the biggest prop account from all of the companies that we have seen and that we've tested. We offer 500,000 funded accounts on two-phase challenges. And so um, this is quite good advantage. And considering that what is the price for it, it's quite competitive. And again, instant funding, the biggest that we have seen from everyone. So we try to make the biggest amount of balance for people for, I wouldn't say the cheapest amount of money, but I would say below average compared to competitors and way better than any of the big brokers or firms.
Gotcha. Yeah, because we've noticed a lot in the industry that there's this race to the bottom as far as the pricing, and other folks have said that it creates this tension that ultimately kind of pulls a lot of the firms down to this lowest price. But in and of itself, while traders might think that's a good thing, it ends up leading the firm to becoming less, sustainable and stable over time. And is that one of the things that you've seen? And is it a concern for you as far as the space,
Absolutely. There are three elements that make pricing in a prop firm. One is discount codes. So this is something that all prop firms offer. And the second one is how much you pay for affiliation, right? So this is if you bring big affiliates that bring your clients and so on, you have to give them a cut. So or pay them CPA or CPL, which is not very favorable sometimes for you. So profit sharing is always best because you receive the money, you can make sure what you pay out. And the third one is how you do your pricing. And this is based on those two first elements. The pricing is a very tricky thing. You need to consider risk management because you need to understand well that you cannot give, or any firm that gives the same amount of, let's say, discount codes or huge discounts on very big balances, sooner or later they're going to fail. And we have seen this, and we do a lot of analysis of our competitors and other firms, that a lot of them don't think about this. In general, bigger amounts of money, the bigger the amounts of the money that a firm grants to a trader, the bigger the risk for the company. So the bigger amount of fee that they should be collecting. But a lot of the firms don't do that. They just like say, oh, 40% discount on my biggest accounts. Well, this is where they will get hit with payouts. So normally we see that between 15 to 30 to 35 days, people get payouts. So the clients that are onboarded today are highly likely to get a payout in between 15 to 35 days, maybe 20 to 35 days. So in 35 days, you're going to get hit with payouts on account that if this account, let's say, for example, 500,000 package, just if memory serves, is about $2,700 of mine. So this means that in 30 days, I might get hit with $50,000 payouts. So there are a lot of firms that they just say, hey, yeah, we can give 100,000 or 200,000 for $200, $300. If you do the math, how much they need to sell to cover one single payout of $100,000, which is absolutely fine that you can make from $500 account, is insane. You need to sell hundreds, if not thousands of challenges in order for you. And don't forget, there is a discount code and there is affiliation profit split. So you get, I would say, as a prop firm, without the rest of the direct costs and everything else, you would get 60% of the price that you see on your website. So these really hit your bottom line, and being sustainable is not going bankrupt. And how you do that is not always have the best price, because there is a lot of these firms that you see that are super aggressive, that they go on Instagram and these BOGOs and this and that. For $100, you get 250K accounts. Those people have no intention of ever paying you out. They are not there to give you payouts. They're just there to collect thousands and thousands of people's money and then either restrict you on the trading restrictions, or say that hey, you failed some condition, or something happened, or you're not eligible for payout, or you're an abuser, or so on and so forth. So we aim at not doing those things. Yes, of course, if you get hit by snipers or abusers and things like that, sure, we're going to not pay them out. But for the normal client that comes to buy a challenge, that passes the challenge, we have nothing but respect. And it's only in our benefit that people get payouts. The more people get payouts, the more we're going to be established and promote ourselves with these payouts and show true success stories and everything else. So it's in our benefit. What firms don't understand is most firms, or don't say out loud, is that most firms prefer small payouts. This is the reality. So on the smaller accounts, I mean, as the owner of a business, I would prefer to have 1,000 people with smaller payouts than one big payout. And this is where people fail to get this discount thing, and they just go and say 40% on my biggest account.
No.
Yeah, it makes you the most money, but it can, in 3 months, it's going to kill your business.
Yeah. So they're not doing really good risk management assessments at the business level. Like they look at things just, from a transactional standpoint. They're not looking at it holistically to say, what am I actually bringing in? How does that impact my bottom line? And is this practice sustainable over the long run?
I don't think a lot of firms are doing that. Or if they're doing that, they're being too conservative. So if you see, and we don't have to mention names, but you can see the leaders of the prop industry, their challenges are not cheap. They don't offer big discounts. Actually, on the contrary, the companies that offer less of a discount and higher price are the most sought through. So they're the ones that people go to. So they prefer to pay $300 more, but to go to a company that is more established. Where the trick is for new companies such as ourselves, how to get established and how to price your things without going bankrupt.
Right.
So but this comes with experience, with knowledge, with risk management, with having not just risk management as a word, with understanding analysis, seeing the statistics, and then adjusting your pricing, your models, and everything else. So for us, we build a completely different pricing model for example, for Japanese traders, because we know how they work. And we will build specific, let's say, trading and pricing models, including balances and everything else, for European traders. They're completely different market. They think and understand differently. What we've understood about, let's say, Southeast Asian traders is they don't care about the price of the challenge. They care about the balance that they get that is relative to the price of the challenge. So if your balance versus fee ratio is good, then they will choose you, even with a little bit of discount or no discount or so on. Again, we're a small firm, we're going to offer discounts, and this is absolutely normal. It's just we pay attention to how much discounts we give, because everyone sees, as I said, the first income. So it's absolutely fine if 1,000 traders today buy challenges, but we check and we accumulate and we go through a process where we try to understand how many of those people will get payouts and what is the risk on them, and try to forecast that, hey, if these 500 people bought big challenges, their possibility of payout is X amount, depending on the country, depending on what they trade, depending on this and that. So it's not easy estimation or forecast, but this gives us the ability to, when we reach there, to have money to pay out. Because I see a lot of firms, they just keep on, bringing fresh money in order to cover their payouts.
Right.
So this is not a sustainable model, and those firms just bleed out money. And we have seen that firms that get targeted because of that, such as sniper groups, that they go. I was watching a podcast of one of the established firms. I don't want to say its name, but the CEO there was saying that they got targeted by 800 people, and he himself did all these investigations and all this stuff, and at the end had to pay about 800 traders, I think $5 million. But
Wow.
that's a lot of money to pay. This is like a hostage situation where if you don't pay them, they go to Trustpilot and they kill your firm. But if you pay them, then you lose all of your margin profits. So these things exist. Their reality, okay. I mean, no one is going to target a small firm, but once you grow, you're going to get more and more targeted by people or
Right.
abusers or people that would say, "Hey, I'm going to complain to this and I'm going to complain to that." So, because my background, law, compliance, and things like this, one of my specialties, licensing, regulations, and complaints.
Hmm.
So, and this is one of the biggest reasons why we think that the future of prop industry is connected to your association. I mean, there should be a association which cares not only for the pro firms but also for the clients and gives them an actual venue for them to be able to raise their complaints.
Right.
And a lot of the complaints will be false, misleading, exaggerated, but some of the complaints will be on to the point. Will be, hey, I traded in the way that is not against the rules of the company.
Right.
And this is what I say to my risk managers and to my team. Hey, if you cannot find on our website and FAQs and terms and conditions anything that the client violated something in his trading history,
Hmm.
then you have to pay them out. There is nothing to discuss with me.
Yeah.
They don't bring me cases as in, oof, I think this guy is a scammer. Based on what?
Right.
I see, maybe, yeah, but this looks like martingale. Okay, is he following the definition of what martingale is on our website? Well, not exactly. Then it's not martingale. It's very simple. I mean, if it's I mean, I wouldn't say very simple, but there is a lot of black and white situations. Of course, there is some, let's say, not so easy to understand situations and things. There could be, for example, arbitrage or price latency and things like this. But you're able with price latency to prove that they're constantly opening positions where they would see and exploit a vulnerability due to the pricing given, and so the difference between the pricing and liquidity.
Hmm.
And this is not clearly visible on their platform. And even on their trade history, this has to be checked versus the pricing that is given from the liquidity provider. But okay, that's why we have the risk management. And this will
Right.
be exceptional cases. And this will be something that will be digging and spending time when there is tens or hundreds of thousands of payouts, not on $200 payouts,
Right.
because this is
Exactly.
not worth our time.
Exactly.
So sorry, I went a bit
No,
over
no,
the
no. That's,
topic and like overboarded to your question.
no, no, no. That's perfectly fine. Yeah. One of the things we're trying to, we think there's like this duality, right? Where there is, the trader doesn't trust the industry necessarily. So you have that whole piece, but then you also have the firms, you know, as you pointed out, the snipers, the bad actors, they can really take a huge chunk out of it. And I don't think the client side of it realizes how big of a problem that is, particularly for some of the larger firms. And as you point out, it was a $5 million payout, and you can't always avoid it. So it's one of those things where you have to do both sides, due diligence. Do you feel that, a lot of firms are not equipped to handle, the kinds of, complaints or, investigations necessary to handle customer complaints, and do they still, is that a process across the prop industry that is still kind of growing and maturing? Because that's one of the things that we noticed at the prop association is that, while you can handle 95% of the complaints, there still are like 5%, and they can be very difficult and challenging, as you pointed out, because you're trying to balance, are these people the bad actors, or are they truly, having a big, problem with something that is legitimate? And, have you seen it where, the industry itself, people are starting to realize how to balance the two, and how are they doing it?
Absolutely. I mean, the types of complaints that they see are very similar to what Forex complaints is, because don't forget, Forex and prop, they're built on the engine of CFDs and the same trading platforms.
Hmm.
So the bottom line of where people trade is the same. Now, prop has a lot of more triggers, conditions, and things like that that differentiates us from Forex. But Ultimately, yes, absolutely. I've seen a lot of the posts because I am active on social media. I read a lot of things. A lot of people came from other companies and like, hey, can you help me with my complaint that I have against, let's say, medium to big sized companies? And I see the answers that they receive. The answers are vague. They're not up to the point. The answers that are given are written by probably back office personnel who half of the time get something from the risk management and then this and that, or predefined responses. Boom, hey, you have violated this. But what they fail to understand is that they don't see the overall picture. So if someone has a problem or something happens, we try to be flexible. So if someone actually violated one of our rules, but he understands that he made a mistake, if he just says and say, hey, you know what? It was over the weekend. I forgot my position and I got stopped out. Can you do something for me? First times, we would always just reset him and just send him a new challenge. Just here you go, brand new challenge,
Right.
irrespective of that, because we want to give him the chance. Unlike other companies that go and say, oh, we love this and we want everyone to make money. Statistically, it's a business. So there is a big percentage of people that are going to fail
Right.
and small percentage of people that are going to get payouts. But again, we don't make it more difficult than already it is for people to get to payouts. So what I see is a lack of understanding and knowledge from prop firms, because a lot of them, don't forget, they never had brokerages. Now that we see a lot of shift into moving from the big players into the brokerage business, a lot of those firms that were never licensed, never got anything, they just got into millions and billions of dollars. They never worked on the regulations. They don't understand a lot of the things. They just paid out people or they just said, we're not going to pay them out. So they never had to justify themselves to a third party or authority or someone that they care about, right?
Right.
So in Forex, if your regulator says there is a complaint against you, you're going to make a proper investigation. In Forex, how many times they deposited, in prop, how many times they purchased. Where did they fail? Why did they fail? Was it the system glitch? Was it their own doing? Was it their stop loss that was triggered? Was it a stop out that was triggered based on the daily or total loss? What happened with this client? Was he
Right.
trading aggressively? Was he abusive? Was he putting 100% of his, let's say, margin into one trade? Like, there is a million things and it's not always black and white. So those people never had to do anything. They just say, well, you're not going to get payout.
Right.
And maybe in some cases, maybe they will refund you your money. In most cases, not even. So to be honest with you, in the last 2 years, maybe I've had one or two cases from thousands and tens of thousands of traders where we said, hey, we are going to return you your money because the way you trade, and this was before they reach a payout, before they have money, before their winnings, we just don't like the way you trade. Something doesn't click. You can't just open these crazy positions with these things and you burn through accounts and you just buy new ones and buy new ones and buy new
Right.
ones. He's just trying to get lucky. He's just betting, right? So going on betting slip and he's just like, oh in, oh in, oh in, oh in, or 90% in, and then 10% just open 0.1, 0.1. So this is not normal prop trading behavior, and you don't want this person, because the idea behind prop trading is for them to prove that they're good traders, not just, oh, I got lucky. We
Right.
had one case where a client bought 40 something accounts and he was just like I don't know, the machines that you go into
Slot
casino and just
machines,
like
yeah.
tip slot machines, yeah, just pick, think, okay, I failed, pick until he gets a payout, and he got a payout and we paid him full, and we said, that's not the behavior of a guy that we want to see. And
Right.
we didn't see it. He bought all these accounts in one day. It was like these 5K accounts, and he bought 45 of them in one day. So as soon as we said, as soon as we saw him, because I got a message from the risk team, and I'm like, guys, like, what is called guy? It's the same name, the same email. So we just blacklisted him to not be able to buy more.
Right.
And then we reviewed what he did, and then we ended up giving him profits and just not allow him to buy anymore.
Gotcha. Yeah,
So this is how there is no right recipe, but again, having the prop association behind you and having a lot of the people that are the members and the board and the council and these who are all from different, let's say, companies and businesses, and with their experience, this would give you a big objectivity boost, as in, hey, I am actually submitting this claim to a board of people, not just I have a problem with Funded7 and Todor wrote to me directly. And he says, well, I was a fraudster.
Right.
So this is the big benefit. You have another association, another person behind you that will help you with everything that you need.
Gotcha. Now, speaking of kind of the difference between brokerages and prop firms, obviously brokerages, they're guided by regulations and rules that they have to abide by. The prop firm space is largely, unregulated, the Wild West. What do you see as the potential for regulation in the industry? Obviously, we're trying to get ahead of that with the Prop Association, but where do you see the potential for regulation and where do you think it might come from?
Well, the only possible regulation is to come from the authorities. I mean, this would always be. This would not be central banks. This would be directly the Security and Exchange Commissions from each country. So the highly regulated countries such as the European Union or ESMA, which is the regulatory authority of the European Union, they will be the first one to put their foot down. Maybe not the first one, but one of the first ones, and then everyone else will follow. Similarly to US, Canada, and everyone else, Australia, all of the normally, let's say, even UK, of course, FCA, all those regulators sooner or later will understand that prop needs to be regulated or wants to be regulated. And honestly, I'm looking forward towards it because the way that we have built our own prop is having this in mind, this mindset of building it as if there is some authority that can at any time come and check you. So I come from this kind of environment, and because of my background, I structured the company in this way that if tomorrow the prop association or the FCA wants to come and check, hey, you're onboarding UK clients and how many, what's up with them, what are your complaints, how many purchases, this, how many fail, how many, I have statistics, here you go, that's it. How you handle your clients like this, like this, like this. How do you treat your complaints and so on. Now, where the problem comes with regulation is over-regulation. I'm sure you're going to ask me that. It's over-regulation is what killed the CFD industry because, again, my forte, Forex, regulations, compliance. ESMA came up with regulations and the MiFID II, these aggressively strangled the entire Forex industry. So in maybe 2018, most of the brokers, they were offshore. And they also had a lot of the onshore business, so meaning Europe. So a lot of the licenses had tons and tens of thousands of clients and a lot of businesses. What ESMA did is because they were bad actors and because there were some really unregulated companies and they were stealing money, they just went over and said, oh, okay, everyone now needs to check everything about themselves and we go into all this bureaucracy window and no one can do this. You cannot get clients from EU. You cannot get clients outside of EU when you're EU. What happened? Fast forward from 2018 to 2023, not a single big Forex company uses or has European license. Not one. I mean, I can name names. It's not a secret. I mean,
Right.
They just said we don't want that trouble. And what they did is they went offshore. They were offshore. They just started using their offshore license, and they said, you know what? I'm just not going to take European clients.
Yeah.
And I was in a company like that, as I mentioned previously, their name. They just said, oh, no to Europe, no to Russia, no to these countries that are super regulated, that they cause you all this trouble. They focus to places where they were not. And they increase their trading volume and clients' funds in times.
Wow.
So the idea behind regulation is great. Over-regulation is suffocating the industry. So they did that. And they were checking, and even nowadays, I mean, it's literally impossible to have a small forex company. All the small forex companies just get suffocated because they can't even pay for their expenses and all the
Right.
things. It's just, if you want to give you an insight, I would say, based on the things that I know about the forex industry and how many owners I know of forex industries in Limassol and this, I would say 50%, without exaggerating, probably I'm conservative, 50% of all forex companies that are based in Cyprus who have Cyprus license under the CISEC, they are just breaking even or just minus, and their shareholders just feed them.
Wow. That's crazy. Yeah, I
Without
mean,
probably percentage is much higher. I'm just being conservative and I don't want to boost.
no, for sure. Yeah, I think that's one of the things we're trying to get ahead of is the regulation. And I think that, we've seen, like you said, it's a balance between trying to weed out the bad actors and still, be true to the clients. Do you feel some of that is just the maturity of the industry itself that as, we progress, it'll sort itself out to some degree? Or is it something that we need to take not that we can't, but that needs an active approach to get us there faster?
Good question. It's possible that the industry will kind of balance itself because all of these big companies and some of the big actors there, they just woke up and they're like, hey, you know what? We don't know anything about Forex. We've never worked in Forex. And they started hiring all these CEOs in Limassol and all these to get their Forex licenses or to buy Forex licenses. Some of them, pro firms just went on and bought the entire Forex companies just because they have the money, which is great. Because now they're going to go and realize that, hey, this is not just that simple. You just don't do demo accounts, buying orders, and just doing these things. On the background behind it, these companies with the Forex, they are quite more sophisticated than prop. Prop is very easily sustainable and made. You can have a prop firm with 4 people, and you can't have you can't have a forex company with even 10 people with Cyprus.
Right.
It's just because of the regulations. You need to have compliance officer, back office. You need to have dealing, and the dealing you have to have specific things, and then you have to hey these, and then two executive directors, non-executive directors, and offices and headquarters and this and that. With like a lot of and licensing and fees and the regulator is like a lot of things. In prop, you just today I got a firm, just here you go. So a lot of those people that set up prop firms, they don't even think, they don't even see front of them. Okay, you collected all this money, you're the owner. Where are you gonna pay tax? Where are you gonna?
Yeah.
How are you gonna get dividends? Which is the entity that receives the money? Like, are you paying VAT or no VAT? Like, these questions are like, people will just end up making these structures and just registering their entities in the wrong countries. Then they cannot get payments, and then or tier one payments because they
Right.
go to some crazy. I mean, if you open a company, a prop, and you're licensed or you're registered, sorry, in non-European country, and you don't have a European entity, you cannot process with tier one. So you just can't process. No, a PSP or tier one payment, Nuvei, the payable, or anyone else tier one, we even touch you, not even close to tier one. But people don't know that. I've seen a lot of the big companies, they just don't understand that. They're now waking up in the last 1 year. They get more and more knowledge about it. So they're structuring the stuff. But how we structured our stuff is we just did a Forex company without a license, done in the proper way with the proper tax, VAT, smart structures, and everything else, as if you're going to get regulated. So if tomorrow there is a regulation, I don't have to like scramble around and figure out how do I justify my profits and what do I do? What are the sales? How do they go? What's the risk? Nope. There is none of that. So if you structure it well, then it will work out for you.
Gotcha. Yeah, I mean, that makes a lot of sense because, ultimately, regulation can come from any of these entities. And they could ask for everything. They could ask for half of it. You don't know what they're going to start with or even end with. So you're right. Having that kind of preventative mindset does help out.
Absolutely.
So let me kind of close it out here by asking you, as we look into the trends over the next, 5 to 10 years in the prop industry, where do you see things moving as far as, both from the industry side and from the client side? Is the industry moving in a way that it's going to consolidate, or are there just going to be more and more actors coming out there? And from the client side, what should they be looking out for? If you were to talk to a prop trader and he's trying to choose, what would you caution him to look for? What are red flags, things like that?
Yeah. So if I may start backwards,
Yeah.
what you should caution a prop trader, because that's most probably the most important thing that people would like to hear about. It's a combination of things, as we said, because there is no regulation in the forex space. You just go to regulator side. Oh, they're regulated. It means that they're doing something right. That is a misleading thing, because you can get regulated from a number of regulators where it means nothing. So what you should pay attention to, you should obviously check websites and things like Trustpilot, where you would see how many positive reviews, negative reviews, what people say online. But you should also check and see what their trading conditions are. And you should keep an open mind. What I mean is, today, just to give you an example, I also take active part of the operations of the company. A guy on Discord, he said, hey, this seems dodgy. Maybe they're not giving payouts. It's like, hey, can you give me more info? Like, how did you read this? How did you reach this conclusion? Like, based on what, something you read on Discord or our
Yeah.
terms and conditions? Like how, I would like to know more. Like how you reached there. It's like, oh yeah, because you have this one condition about. I was like, based on that, that's not a factor for you to understand if I pay out or not. I mean, the most important thing is good deals. If something looks too good to be true, it probably is. As in, you would see these proffers where they say, hey, I'll give you 100K account for $50, $100. They can't make money with $100.
Yeah.
And they have African local payments or something. You do understand the company loses tons of money on that. And if they don't have, as again, going back to payments, tier one processing, the fees on one purchase can rack up between 5 to 15%.
Wow.
So let me give you like a bit of math. You give 25% discount. You probably have 20% affiliation cost. You have internal costs. You have salaries. You have everything else. And then on top of that, you have payouts, which also is the cost at the end of the day. And how are you going to justify all these things? And then you give something that, and then you have payments, which if you don't have good processing because you don't understand it, then you think everything is just crypto, but it's not. How are you going to make money? You can't. You just sell as much as possible, and you just hope that these people don't reach a payout, and then you start strengthening your trading rules. So if, for example, you get 10,000 traders who join in this month, you know, or you should know that in 30 to 40 to 20 days, you're going to get payouts.
Right.
So how are you going to pay these people? If you have a very small budget, and if your challenges are worth, let's say, $2,700, like my 500K, but I give it for $500, there will be lots of people that are interested and they will buy it, right? Because 500K for $500, yeah, any day. How will I pay them out? When in 30 days, let's say 100 people buy, the super minimum, 4 pass, let's say 4, which is 4% passing. And they get maybe 300,000 in payout. I didn't make
Yeah.
300. How are you going to pay them out? So the math people should be asking themselves is, hey, why are the big firms giving 5 to 10% discount and they have the highest possible pricing, but there is these small firms that you never heard about with all these animals and all this stuff that you see super aggressive on ads, and they're selling their 250K and 100K for less than $200.
Right.
Because I had a chat with one guy on Discord, and when I taught him this stuff, he was like, duh, this makes sense, but no one makes the math. And I'm like, well, you can't sell challenges like this. Or, for instance, instant funding. How are people selling instant funded with big discounts? Instant funded is where you
Yeah.
basically give them an account without evaluation. So you can't give big margins. I mean, you can't give, sorry, big balances. And you can see, for example, in two-phase challenges, the biggest account that we have is 500K, but on instant trading, it's only 75,000. So this is 8 times less. And why that is? Because there's no evaluations. And the price for this 75,000 is bigger than the price for the 500K.
Right.
Because again, this is real money on live accounts. So this 75,000, there is no challenges, there is no daily loss, total loss, or anything else. You just go and trade.
Right.
You win, I have to pay it out. And if I don't pay it out, it's bad for me. So the price for this is much higher than the price for any two-phase challenge or one phase, because the risk there is much higher for me and the balance is much lower. So how to structure your challenges? You need to see where your risk is. And for me, the least amount of risk is on two-phase challenges, smaller amounts of money. And this is where I can go aggressive and I can say, buy one, get one. I can say, give you 40% discount on them. So there it makes sense. But you see a big account with huge percentage, you should be worried if they're ever going to get paid. How are you going to
Right.
get paid out of this? And of course, I'm not talking FTMO and huge companies that are established with 10 years and they have $1 billion to buy Wanda and stuff like this. So no, those firms don't have shortage of equity, but they're not doing buy one, get ones.
Right.
They're not selling $100 challenges. You go to their website and you compare it to ours, you see the prices per dollar spent balance is double or triple. So you need to find this sweet spot where you're not too cheap
Right.
so that you can't get payouts, but you're not too expensive. So this is where you need to play around and find what is this? So my advice to traders is use math, use your brain, and even AI. Use some ChatGPT. Just run just ask a question. Hey, if I buy a challenge of X amount of balance and I buy it for this much and these are the conditions, how many challenges does the company have to buy in order for me to get out an approximate payout out of this? Because prop firms go out and they say crazy numbers. They say, "Whoa, we pay 50% of our 50% of our traders get payouts." That's not statistically possible. If this was the case, then you would have no money.
Right.
So there is a lot of let's say confusion or misguided or a lot of people trying to trick others and saying things that aren't realistic. Realistically, what the firm should be aiming at is having a payout of about 7 to 10 to 12%, which is healthy, which is good, and it should be spread out over multiple accounts rather than being big accounts. Because paying out to one guy 30K is great, but paying out 30 people with $1,000, I believe it's better.
True.
So it's better for us, it's better for them, it's better for the numbers, it's just better. So this is what I would advise a person. Just don't look at one single factor and decide that this is bad. Oh, their take profit is 10%, 8%, 6%, it's great. Or their total loss is this is great, or it's bad. Or the price is this is great or it's bad. Or this can, like you take prop challenges are made out of 20, 30, 50 elements. And there is different prop challenges and different balances and different complexities, platforms, add-ons. So if you ask me, there is a lot of stuff. We, for example, give a lot of add-ons to people because we want them to succeed, but we also want them to want to make money. So we have, for example, with two phase challenges, we have 4 add-ons that people can buy, which increases the chance of them passing the challenges. And these are increased total loss, increased daily loss, and double the leverage. Because we know that leverage works for you or against you.
Right.
So, yes, you have bigger exposure. So you can make money faster, but you can lose money faster as well. So those let's say add-ons increase your risk, some of them, but most of them actually help you pass the challenge. I mean, the increased daily and total loss, they give you a buffer of another 5%, which in some challenges, this is 50%. So and that's why we price it 50% higher, because we have to.
Right.
Because we give you 50% chance more to pass a challenge than what otherwise you would.
Gotcha.
So these are the things that we do for traders.
Gotcha. That makes sense. Yeah. And then as far as, let's just say the trends in the industry, where do you see that the prop association has a role as far as, creating a more sustainable industry, both for the trader and for the, the prop firms themselves over the next, 5 to 10 years?
I would even say in the next 1 year. I mean, 5 to 10 years sounds great, but it's very far away. I mean,
True.
things in prop move in months rather than years. Forex, sure, 5, 10 years, but prop 1 year. Where I see the prop association in 1 year, I see the prop association as established a dispute resolution platform where 100 or more prop firms we want to be registered, not because of they want to pay marketing budgets like those websites where you just get listed and get reviewed and stuff like this in order for to pay monthly fees. But I really like the model that you have with the annual subscriptions and the fact that you dispute and you help others to be heard, to get more professional reviews on their problem. Because yes, if I have a problem and I submit it to a company and they just blank response me, give me a response where it's like, hey, yeah, it's fine, we checked it, but it's really bad and it doesn't work. I would much prefer to have, let's say, a proper disputed document from the prop association where we can actually understand that this has been reviewed, trading history, purchases, risk management, and everything else. And some clients will not be happy because we will tell them, hey, there is nothing for the prop to do for you. You just didn't close your positions in time. And yeah, but I was busy. Great, but the prop is not going to go and close your positions. I mean, like, what are you talking about? So there will be cases where people will be unhappy. But where we see the future of the prop association is that there is a objective authority and mechanism for people to complain, and someone will review their complaints, and when necessary there will be success stories, and there will be people and companies that will be able to claim this money, because even you're part of such an organization, even as myself, I would think twice if the board members decide that I mistreated the client.
Right.
Because I'll be like, hey, was this really the case and I missed it? Because sometimes, I mean, don't think that CEOs and CEOs of prop companies, they review every single complaint or they know everything about their company. They don't. They have chains of people and tons of lines in between them and the people that are actually handling it. So if there is an underlying problem, for example, with the trading platform or something that is happening, they need a mechanism that this will be escalated. And I think the proposition will provide this mechanism for senior management to be, hey, Jordan, there is a problem with your prop. Or, hey, Todor, there's a problem with your prop. We noticed that 5 people came and complained that they get stopped out early and they're sending us screenshots, and we're seeing earlier than they're 5% calculating it based on these factors, right?
Right.
And then I'll be like, wow, okay, so let me go sit with my risk manager and figure this out. It's a real problem. Let me resolve it. So this is where I see this coming, and I believe that this is way better than having a regulator, because the regulator will come and check. You have complaints policy. You have this. You have this. You have this. You have this. It's checkpoint kind of stuff. Right. So does that mean that you're really compliant? No. That means that you know how to be compliant.
Right. Gotcha.
So there is a big difference between knowing how to do something and actually doing it.
That makes a lot of sense. Listen, I want to thank you for taking the time today. Really, really appreciate it.
Thank you, Jordan.
Really, really happy to have you on board with the Prop Association and look forward to working with you down the road.
Pleasure. Thank you so much for your time, and looking forward to working together.